Stocks rise and markets fall like sleigh bells ringing before the call. With bulls charging like a reindeer in flight and bears hibernating on a snowy night. The angle will keep you in the fight. Hold on tight, the stage is set. Dig in deep with no regret. Red and green bars leading the way. Welcome to the angle, no time to delay. Deck the halls with charts and graphs where financial wisdom wraps in wreaths and laughs. In the Santa rally, watch it soar with profits climbing more and more. Hold on tight, the stage is set. Dig in deep with no regret. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And it is a short week this week, a very short week. We've got Thanksgiving on Thursday, if you didn't know, and a half day on Friday. So it's looking like we're going to have a very quick and tight, easy week. Easy, hopefully. We'll see. But it's going to be an interesting one. Nevertheless, not to mention coming off of the last 2 days on the stock market, it has been a very, very, very interesting end of the OPEX for November and into a new OPEX into December here. And I'm very excited to get into everything as we enter this very short week. Now, before we get too deep into anything, as I like to do with you guys, as always, on every Monday stream, we're going to go over our Catalyst Watch for the week. Now, again, as I've already said it like 3 times, is a shorter week, so you want to be a little bit more sensitive to some of these catalysts as they could stoke a stronger reaction either which way, mainly due to the fact that big money tends to go on vacation early. So I'm probably anticipating Wednesday on to be pretty dead or very retail driven. And a lot of the institutional funds and a lot of the institutional investors probably are going to be done Tuesday, maybe Wednesday morning at the latest. So just keep that in the back of your head. Anyway, looking at our Catalyst Watch for the week, we just have Trump right now today signing some executive orders at 4 o'clock. That seems to be really the only thing scheduled that would be of concern, I guess I should say, this week. Looking forward to tomorrow. This week. Tomorrow. Looking forward to tomorrow. Sorry. Start over. The Trump thing's the only thing that could be of concern today. However, that's not till after hours at 4 o'clock, so probably won't be an issue. So looking like a clean trading day today in terms of expected catalysts. Now we're going into tomorrow. We have PPI scheduled in the pre-market at 8:30 tomorrow, and then consumer confidence at 10 o'clock. Outside of that, again, another quiet day tomorrow in terms of any news catalysts. Fast forwarding to Wednesday, we have jobless claims pre-market at 8:30. And Beige Book at 2 o'clock. Sometimes Beige Book can affect the market. But again, a pretty quiet week, all things considered. As I alluded to before, Thursday is Thanksgiving, so the market will not be open. And Friday is a half day. Let me just see if there's anything scheduled on Friday during the half day. I didn't think so. No. You got Chicago PMI, but outside of that, nothing really. A lot of stuff going on if you're exposed in other markets, like especially European markets on Friday, but nothing really on the U.S. side of things. So looking like all in all, a very, very light catalyst week, a light week of anything that could blow things out of proportion necessarily, which is good, all things considered. We like to keep things as calm as possible. So it's looking like we're going to have a very tame week in terms of what is expected for the market. I like to pick my words very carefully, as you guys know. So let's get into the market. Let's take a peek at what's happening so far in the pre-market. Let's zoom out here just a little bit. Basically kind of forming like a double top. So we gapped up on the market open and pre-market. So futures were a little green, showing that here, reflecting that obviously at the 4 a.m. open of the pre-market on the SPY. And now, shot back down and then kind of grinded all the way back up, basically forming a double top in the pre-market session here, right around the 633. I believe the higher 7 something, 633.74, 663.86. So that's going to be a tight range you want to watch today, especially seeing that as an area to break for the upside if we're a bull. So what I'll do here is I'll put a nice little, we'll do a purple line. We'll put it right. We'll do a right there. Boom. Do a purple line. And we'll keep an eye on that. That's our pre-market high, and it's significant, especially because it's kind of like a double top. That high that we hit right when the pre-market opened, and then a high again right before the market opens. Something that you want to be keep on eyes as is a little bit more significant, especially considering the daily candle. Let's go out and zoom out here on the daily chart. Obviously, unless you were under a rock, had a pretty rough day there on the SPY on last Thursday. Friday, bulls tried to show up, but kind of formed not much of a, I don't want to say a doji, because obviously it's not a doji candle, but I want to call it an indecision candle, because you're low, you made a new low, you didn't make a higher high, and you closed somewhere in the middle, not in the middle of the previous bar, you closed in the middle of the lower end of the previous bar, and underneath the POC and underneath the AEMA. Not a good look on the daily, if I'm being honest with you guys. And actually where we're opening right now around this range is right where the AEMA is on the daily chart. That number is 664.01, so pretty significant today that we're looking around that area. But what I want to highlight to you guys, and actually we should add this to our watch list today, I spoke about this in the Discord, is RSP. So this is your equal weighted SPY. So what makes this different than regular SPY? So regular SPY obviously has certain components that make up those 500 companies that are heavier than others. So like, for example, NVIDIA is like 10% of the entire S&P 500. When you look at RSP comparatively, they're all 1/500th of the fund, right? So they're all equal weighted, thus the name. And I want you to notice the difference here, and we're also going to compare with IWM. The difference in the daily candle here from Friday on RSP and on SPY, and let's look at IWM as well, versus Qs. So this, just looking at these 4 indexes alone, can give you a snapshot of where we could see some money rotating. And if you've been watching the program, I've been talking about how I'm seeing some money go into healthcare mainly, but even other sectors as well. And this is actually going to be supporting that narrative very clearly as we see tech significantly weaker. Again, these are daily candles than the other comparative indexes. IWM showing a lot more strength, higher volume than that Thursday candle, right? Did not engulf the previous candle, but a higher percentage move. If we're looking at all of these on the Thursday candle, they're all the same, right? Very, very similar candle bodies on the Thursday, right? Very similar. It was a bad day. Everything went down, right? Now, what matters is this bounce part. Look at IWM, higher volume, a bigger body, a bigger percentage move. You had almost a 3%, 2.83% move. RSP, more volume, bigger body. That was a 1.97% move. Now let's look at the Qs. Smaller body comparatively, and only a 0.75% move on lower volume comparative to the Thursday candle. And SPY is somewhere in the between there, right? Lower volume, but because it's so tech heavy, the body is also smaller as well. So this is very indicative to me that what I like to call them is the 493 of the stock market, right? Not the Mag 7. All the other ones are starting to push up to the upside and showing some resiliency as we're getting some level of a bounce here to push even higher on the overall market. So this is a good sign for you if you are more diversified and not necessarily so tech focused or tech heavy. With that being said, that doesn't necessarily mean these are bad stocks. The Mag 7 stocks are bad stocks. In fact, as I'm talking about it, Google is making a new all-time high in the pre-market at 312, which is insane. Google is going. I'm sure we had news here or something. I don't know. We'll go back to that later. I've been very busy this morning, so I missed out on if there was news on Google. If you want to tell me in the chat, feel free to tell me. But this is one of those names, and I've been saying it. If you were been watching the program, we've been talking about Google being a good long, theoretically, all the way down here. Where's my purple one? Right down here at like 162. And I was saying, as long as Google's pushing to the upside, this is your canary in the coal mine. This is your sign that the Mag 7 stocks are doing well. I am now going to change my wording here a little bit. And now Google is not really indicative of Mag 7 performance. It's going to be, back to what it was, indicative of its own performance, because I do think we're going to see some reshuffling amongst those Mag 7 names. This is something else I've talked about on the program, where the money that are in the Mag 7 are going to rotate around the Mag 7. So they're not necessarily going to, I don't believe, I should say, we're going to see divesting from Mag 7 names to go into other sectors or under industries, but rather into other Mag 7 names. Now that narrative would be supported assuming the Qs trades more like this, where it kind of just plots sideways necessarily, because that would reflect that no new inflows or really outflows are going into the Qs. It's just kind of staying stagnant. So that, and again, the Qs are bigger than the Mag 7, but it would give you more of an idea that if we're seeing that kind of motion here, and we're seeing Google up 4%, while Nvidia is relatively flat, or Microsoft is flat, you're seeing a diverged market, so to speak, amongst the Mag 7 names, where you're looking at Microsoft getting kicked in the teeth here near its 200 MA. This is where I've been watching it, and I'm going to actually put an alert down here today, an alert below. I'm looking for this LOI tap right here at 464.79. This is my, you're going to hit the 200 MA. This is going to be a good spot to watch Microsoft if you want to have some Microsoft longs, but it doesn't look good, right? If you go from the recent highs from their earnings down to that close of that, or I'm sorry, the low of that candle, that's a 15% drawdown on Microsoft. You have similar price action on Nvidia. We talked about it before. If we go from the high to the low here, I believe it's 18%. Yeah, around an 18% drawdown from the highs. So you're seeing this divergence within the Mag 7 names right now of stronger pull downs on individual names. You go all the way up here from Meta. You're in a bear market on Meta officially, 20%. Whereas, obviously, Google has been ripping to the upside. Apple's been holding its own pretty good. It's not really going much of anywhere, but it's been holding up. And Tesla's been a little funky. All right, you got a little bit of both ways here, but if we want to go from the highs to the lows here, okay, 18% drawdown as well. So you're seeing a real mixed bag amongst the Mag 7 names. Also, watch Amazon down here as well. Around, you guys know, like 221. Very mixed bag here in the Mag 7 names, but most of them leaning more bearish, which makes sense. Most of them down about 15% from those highs. And you can argue those highs were pretty lofty. They all popped up to the upside and then kind of shot down very quickly, which makes sense with how we had those multiple gap up days here on the SPY. So they all correlate very clearly. So that's just something to keep an eye on as you head into today and the rest of the week. Now we got about 1 minute until the market opens. Looks like we're going to open around the 663.05 LOI. Pre-market POCs looking pretty sticky right around here at 662.66. You've got the 200 MA coming up. So right now we're opening kind of a bit of a chop zone in my opinion. You've got this LOI down here at 661.78. Obviously this one I just mentioned, 663.05. And this pre-market high is going to be your bull trigger. So really you're looking like a pretty tight range of about $2, which is unusual for the SPY lately. But that's going to be what you want to keep your eyes on as we head into the market open today. We're also going to get into the VIX and VVIX in a little bit after market opens. But we're going to get ready right now to start the day.
The market is about to open. It's time to start the day.
All right, the market is just about to open right now. Right now, SPY is at 662.79, treating that POC as a clear support here as we are now open. Open price is 662.67 right now. Again, opening on that pre-market POC. So you're going to want to watch that level very closely. Again, this 663.05 is going to be a key level you're going to want to keep an eye on as well. But I wouldn't get too... I want to use the word vivacious. Is that a word? I wouldn't get too aggressive either direction here until we get a break of either the 661.78 or the 663.86. I think both of those are going to be your triggers to the upside here or downside. But before either one breaks, I think you're kind of opening with a Monday chop. You got to keep in mind that the rest of the week, again, we have no catalyst. So if we can form a trend one way or the other, that's the side of the trade you want to be on, especially on a Monday morning, especially on a new OPEX, and especially after the last 2 days of price action. You're going to want to take it a little bit slower than usual, perhaps, and kind of let this open boil out to see if we can pick a direction here. There's been a lot of information on social media recently about where things are kind of going and where people feel seasonality wise or based on certain news where they think the market may be headed. And I think a lot of that can give you clouded judgment. Just tap that trigger up here, almost to the penny. 1 penny off, made a 1 penny high there. Look, trying to break it. The reason why I'm saying this is I had a little conversation this morning in our Discord community. If you want to check out, links in my bio. And the point of that conversation was, the market is not on easy mode right now, right? We talked about the SPY before and how this time, when basically coming up from those April lows, this is easy mode. The market just overall tends to go to the upside, right? We're not necessarily in easy mode here. Volatility's higher. You're underneath the 50 MA. The VIX is higher. The market's a little rocky both ways, right? Both bullish and bearish. You want to be very careful falling into a bias that you're very bullish or very bearish because of seasonality or because of XYZ indicator. I think the safe thing to do is remain very nimble, and obviously know your trade horizon, right? Are you trading for today? Are you trading for tomorrow, next month, next year? Those things matter, right? When you're making an investment, you're trading equity, you are looking more longer term. If you're day trading, then you're obviously looking at today. So the different people are going to look at the market different ways. And depending on how you shift those gears, that's going to affect how you should view things. With that being said, be very cautious and be prepared to correct yourself if inaccurate, right? If you find yourself wrong, be willing to change your mindset on which way the things are going. I was very bullish last Thursday when we had a live stream. You guys saw we gapped up. It looked like we were going to rock and roll. And this was before that death candle happened on the entire market. But things were looking fantastic. And unfortunately, it was just one of those things where a Fed speaker came in, said something, the market got fearful, and everything got shot to hell. And it happens. And when that stuff happens, it's important not to go, no, I'm still just as bullish because everything's still great. It's not. You have to adjust. And you could still be bullish in that scenario, but you have to adjust your mindset on what you're looking at to either validate or justify whatever your thesis may be. So I think the most important thing I could say to you guys right now is to remain nimble in this environment. I will say that the end of the year tends to always favor the bulls versus the bears. Tends to. And again, this falls into the seasonality conversation. There could be times where the market just goes to hell because of XYZ. Someone says something, something happens, some news report comes out, whatever, right? So that's why it's dangerous to focus on just because it's the end of the year, things can go up. However, typically goes that way, right? So if I'm leaning one way, I'm leaning bullish right now. If I had to pick a direction, I'm still leaning bullish, but I'm not feeling comfortable, and make that abundantly clear, being a bull until we're over the 50 MA, and really until we engulf over this Thursday down day. It was bad. The 50 MA right now on the daily chart is 669.11, so you're about 5 points off, and the high of that Thursday candle is 675.56. So that's going to be the area in which I feel better about the market. Anywhere in between, very similar to this, right? Very similar to how we had this down day here and kind of we kind of bopped around in this range before getting a pretty firm breakout. Kind of how I feel here, right? You want to at least remain nimble, be ready to flip on a switch either which way, because that's kind of what we're going to get. Looking at today so far, get the lines back on the chart. We broke that pre-market high with good volume, and we've had nothing but green candles from the open. So things are, knock on wood, looking okay so far. But we don't want to get too ahead of ourselves in general. It's Monday morning. It's after 2 very volatile days. Let's see what happens. And we'll keep an eye on volatility to see if it supports our argument or not, which so far it is, as we're pushing lower underneath that 2309 area, which I said was very, very important. That first, this is a 5-minute candle, by the way, that first 5-minute candle slicing through those two LOIs right here. What you want to look at for additional downside on the VIX is getting sub 2030. So we do have this little LOI right here at 2142. So you could come down there and bop around in here. And even if you break 2142, you still got about $1 and change here to DK on the VIX, which is pretty solid. But this is the big level you want to watch, 2030. And I've been saying the VIX is too hot. It's too high right now. All things considered, it shouldn't be this high. Breaking 2030 should and could lead to a sharper decay here all the way down to this 1830 range. And remember, the VIX, at least in this environment, at least with this presidency, tends to float around 14 to 17-ish, right? It likes to be comfortable there. If you don't believe me, go to the daily chart And typically, we're in this range, maybe a little higher if I want to be like 1750. We're somewhere in that range, right? Most days. And obviously, you get your volatility pops, but you get back down there pretty quickly. So that's why I'm looking for a return back in this range to reaffirm to me that traders feel more confident on SPX and the directionality of SPX. So consequently, we need the VIX to come down, and I need to see as a bull that we're still going in the bullish direction. Because remember, the VIX isn't not necessarily a one-to-one relationship with SPX. There could be a scenario in which the VIX goes down and the market also goes down. And that could actually indicate that traders are more confident to the downside on the overall market, even though volatility is dropping. So that's important to keep in the back of your head. Eddie dropping the "you're" in the chat. What's up, my friend? Thanks for coming by. Drop you a "you're" right back. Hope you guys are doing well this morning. If you haven't already, we got a smaller crew today, and I'm assuming we're going to get less viewers this week just because I know a lot of people take this week off due to obviously enjoying your holiday or taking a vacation early. But if you're here, do me a favor and support the stream in your favorite way, whatever platform you're watching on: YouTube, Twitch, Instagram, Kick, and X. There we go. Like the stream, interact with the stream in your favorite way. I like when you guys write in the chat, so if you like that, I typically talk back to you. And if you haven't already, pop on over to the YouTube channel. Make sure you hit that like and subscribe button. Once we get to 500 subscribers, this will be an everyday show. So if you like the show and you want to see more, do me a favor, hit that subscribe button if you haven't already. Good morning, Hatchet. Hope you're doing well, my friend. Alrighty, so let's get back into SPY here. So what I want to see if I'm a bull on the day, because like I said, there aren't a lot of catalysts today, so we could have a very clean day in terms of price action, which is great. What I want to see as a bull here is the pre-market high back test and act as new support here intraday, which is this purple line on my chart. Because that's that pre-market high that we had from 4:30 a.m. for those of you who weren't there earlier. It's a few cents higher. But it's essentially a double top from that earlier pre-market high. That's why you got that kind of a violent break there. A more bullish scenario is if we hold above the 664.55. I don't think that'll happen. I think we'll come back here first. But I want to see if we can build some level of support here. And if we do, then I'm more interested in a long for the upside today, assuming volatility doesn't go too haywire on me, which it's looking okay. VVIX is still a little higher at 114 right now. As a bull, you like VVIX under 100. Anything north of specifically like 115 tends to push things, tends to make volatility very, I almost want to say caustic, very explosive, right? If you're over 115 on VVIX, you tend to get sharp pushes on the VIX as a higher probability, I guess I should say. So as long as we're under 115, we're very close to teetering there, then theoretically the VIX should continue its path of decay. We will see, though. NVIDIA right now, it's popping on our Mag 7 names, and we'll go around the board and we'll see if SPY is doing well. Actually, before we pop in on our Mag 7 names, I do want to highlight how we talked about the 4 indexes here, because I'm now going to keep RSP up here for you guys on the program to show that we could see some divergence going on. You're actually seeing inflow into tech today and outflow, and again, this is equal weight. So the SPY today, equal weighted, is down so far, right? Which tells me that IWM, which is still green, is not performing as well comparatively to the Qs. So we're seeing a lot of money go into the Qs today, while equal weight SPY is going down. So that's indicative of general market weakness today, even though we're up on the Qs pretty healthily and the SPY is doing pretty okay. A lot of that's going to be contributed to this strong gap up on Google today, up 5%. It's pretty insane. So far, NVIDIA not looking the best, but not looking the worst. I mean, it's hard to say it's not looking it's not looking bad with having these 3 red days thus far on NVIDIA. Today, if I don't see a nice push over 183.30, which I know sounds a little insane, but because of how volatile it's been recently, having a stronger volatility move on this name, a quicker snapback, isn't shocking. So if I don't see a push up to 183.30 today on NVIDIA, I'm going to be more defensive on this name, meaning I'm not going to be so bullish in general. It's sitting, as you can see, my little green dotted line here. This is the POC, and this is from a period of significant consolidation over here before getting a decent break. So this POC is pretty important. In fact, I should put a line there. 178.80, which we're literally at right now. We're bouncing around it. That's a big important POC for this price action because you're trading at all-time highs, bouncing around in between that 178.80, and you guys know I talked about 183.30 quite a bit on Nvidia, so you're sitting in that $5 range there. It's very important on the daily and even on the weekly chart to see if the bulls step in here sooner than later. If not, it could lend to some weakness on Nvidia here in the near term, which wouldn't be a good look going into the end of the year. I find that very hard to believe. I find it very hard to believe that institutional investors would let Nvidia fall pre-January 1st. Let me say it like that. I don't think that would be a likely scenario. And they blew their earnings out of the water, honestly. They had really solid earnings. I just don't see it happening. I just don't. Now, is it going to rally all the way back to 212 by the end of the year? I don't know. I just don't think it's going to go much lower here. It could, of course. It's not out of the woods either which way, like I just said. I just don't see it happening. I could be wrong. I just don't see it as a likely scenario. Man, look at Google. Man, it sucks if you're short Google. It sucks. Looking out on Amazon here, kind of like, again, not exactly a double top, but pretty much a double top, pretty close. Both off earnings reports. There's your earnings candle, and there's your other earnings candle. Pop up and shot down. Coming down to the 200 MA. This is my buy point on Microsoft. I will be buying Microsoft on the 200 MA tap around this 464.79 LOI. That would be more of an investment, more of a longer term thing. So before any of you jump on in the comments and say, oh, well, it's clearly in a bear market. Oh, it could be. And depending on price action, I may wait a little longer because obviously it is pretty overdrawn here in the daily and on the weekly. Because it realistically could come all the way down to 406. But again, that's the beauty of equity. I can add here. I can add again at 406 between these two LOIs down here. So it kind of depends. You could get a knife right through it. And I don't really love adding long equity below the 200 MA. And a lot of institutional investors are watching that 200 MA as well. So for a name as big as Microsoft, I think it's going to hold that area. It's been sitting north of this LOI now for about the last 6 months or so. So you could argue on a big longer term time frame, this is some level of consolidation. Again, we're talking like yearly time frame, or not yearly, monthly time frame. You're consolidating in a quite a large range here, but at least this $100 range before getting a continued move to the upside. Meta right now, it's so iffy. I said on the program before, I'm interested in buying Meta sub 550-ish. It looks like it wants to turn things around here, and it's trying to bottom out. But it's done that a few times. Like right here, it tried to bottom out, and they got shot down. It's trying to do that again. Could it get shot down again? Maybe. I would not lean too heavily bullish or bearish on Meta. I could see a bull and a bear case both ways. Obviously, this MACD is looking like it's ready for a violent return to the upside. Your RSI is starting to curl up, so it's showing some bull momentum taking off here. Like we could get a reversal. And I like Meta as a company, and I think they'll be a much larger company in the future if they keep on the same trajectory they're on. I just don't know if this is the price to buy. Apple right now kind of banging its head here in like a quad top kind of scenario here. Basically between here and 277.05, we're kind of just bouncing around the highs here, where it could kind of rip it to the end of the year. I like how the volume here has been climbing the last few days. You can see, you zoom in here, the volume has been going up. This is your bad, horrible day on the market here on the 20th. The next day, you actually closed above that 20th close, which is very good, or even the open, I'm sorry. Closed above that, so you had an engulfing candle. You're breaking the SAR here with another green candle here. MACD curling up. RSI is in a good spot as well. I actually might open some end-of-the-year swings on Apple here, playing for that 277 break to push to the upside. This is something I'm going to keep a tight eye on. I mean, you had a nice healthy move here in the pre-market. I'm sorry, in the market open. So I'm not necessarily going to rush into this one, but this is what I want to keep on a close watch this week. So on a very short list, as I was looking through names over the weekend, there's not a lot that I am in love with for a swing trade at this moment in time. But this caught my eye as the potential, mainly due to how it was behaving when the market drew down and what that could mean in the near-term future. And I like the way the Apple's sitting right now. Especially breaking that daily SAR is a really solid sign. It might be a little premature, at least intraday, just because of how much of a hard push we had here. So come down a little bit, obviously. But this is one I think if you like a Mag 7 name, you like a tech name, you should keep on watch. Obviously, they're very cash heavy, so if your concern is growth versus cash or anything, Apple's more than likely going to hold itself together pretty well. Tesla's been a little funky, like we kind of talked about in the pre-market here. I don't love or hate it either way. What's cool is if you did a fib retracement here, you'll notice that we basically bounced right in the GP here on the daily chart, which is pretty nice. So if that holds, that's looking like a good sign just from that alone to push to the upside here a little bit. But I think you're front running just a tad. And Amazon adding to the 200 MA. My alert did not fire. I have an alert set, as you can see here, at 214.90, where the low was 215.18. So I never got the notification that I should try to go long on Amazon. That's okay. We might kind of bounce around here a little bit more. Amazon's another one of those names. This obviously is a very different chart than Apple, but this is another one of those names I think may have a good push into the end of the year. I think it could get back to highs, kind of like a V bottom-y kind of shape here. So even though you had a hard rally, hard fall, I think you could have another hard rally into the end of the year. These are weekly candles here, so this is what happened within the last 3 weeks. I don't find it insane to think in the next 3 weeks you get back to the highs. So food for thought. But that's kind of how we're sitting right now. The market gave back those gains. Now underneath that pre-market level, I would be very cautious still on this open. I kind of alluded to that already. We're seeing strength come in on the Qs and now IWM. So this is good. That wasn't the case before, but we're seeing like we might get on the same page here. And RSP. So this is looking like we're getting, I'm going to go long on the SPY actually. This is looking like we're getting a good sign. Contracts are a little pricey. We'll do the devil's number. We'll go 666, I think. All right, I'm long 666 calls at 239. So we'll see where that takes us. I wouldn't mess around with 0 DTEs this week probably at all. Let's actually check our IV on the 0 days. IV is insanely high still. So the market's still pricing in that chance of a volatile push either which way, which this week specifically, I think favors the bulls. That extra volatility, I think, will favor the bulls overall. It's just a matter of if we get it, right? It's a matter of if that volatility, if the VIX actually decays to the downside here. So that's kind of what I'm looking out for here on the overall market. Let me just check something real quick. Okay, took care of that. So we'll keep an eye on the SPY right now. What I'm looking for here is that we see a continuation trend that all of the indexes are moving to the upside with the VIX continuing to decay. Now, like I said, you don't want to get too excited on the VIX here unless we're getting under this 2142. But it's looking like the trend of IWM is starting to try to push to the upside with the exception of this last 1 minute candle here. The trend of the Qs was looking like we got a nice pop, cool off before going again with the exception of this last candle here. And SPY was looking a little, comparatively, a little bit more bearish, but what I'm trying to play here is the fact that RSP was the most bearish, right? It was actually red on the day, and getting the same kind of rally here that we're seeing on RSP comparative to the SPY and the Qs and IWM at the same time. And it's looking like I was very unlucky with my entry. That was not a good entry. We will see what happens. So now we're at the 200 MA here. And again, like I said, there is a chance that we're chopping around in here. Unless we got news and I just had timed that awfully. We'll see. Which I don't think we did. Let me just double check. I do not. Oh, cool. Oh, China Trump news. The timing was not the best. It doesn't look bad though, but there is conversations with Xi and Trump going on right now. It's not on the docket. So we'll see. This was the bottom of the chop zone, so to speak. So I think we're going to wick this and break up back above the 200 MA and get back up here. But that's why I said that those 0 days are going to be very volatile in general. Volatility is around open price here. So we're going to see how it behaves. We're getting a little volatility here on the open-ish. Near the open. IWM holding up pretty solid, honestly. I might want to open along there instead. Yeah, RSP moving down. What I'm kind of betting on for the SPY long specifically is that I was seeing the Qs and IWM move up while RSP was looking like it was also getting a recovery, which is a good sign specifically for the SPY because it's showing that you have a lot of strength already in the Qs. You're having strength come in your small stocks, and then if theoretically, if your equal weight SPY is performing to the upside, then if I know the Qs are strong, or the strongest index today, then playing the SPY would give me a little extra juice to the upside, assuming RSP goes green. So it's a little bit of a multi-pronged approach here, assuming VIX can keep a lid on it and not get much hotter here. If we break 2309, that more than likely, like short term, may invalidate my long here, because that's a very strong risk point here on volatility today, where we don't really want to be over 2309 at all, especially as a bull. So we're going to want to see some level of of volatility getting shot back down here. Now, something else to notice here, VVIX did not climb up as much as it really should have, considering this kind of move here on the VIX. You got about a $1 move here on the VIX, and VVIX didn't really budge too much. So that tells me that I don't think that this volatility spike here is going to stick. I don't think that's going to stick at all. Consequently, the market should revert back to the upside. I'd be more, and now we're getting a little bit of that, I'd be more concerned if we saw the VIX come up and VVIX went up with it. So now if we see us come back down on the VIX and we see VVIX break the lows, that's going to be a solid sign that we get kind of like a face ripper here, or potential, pick my words carefully, for a face ripper rally on the SPY today. Just like that, those contracts I entered at 239 or whatever got all the way down to 183 and back up to 232. That's how volatile we're playing in right now. So I said I wouldn't mess around with 0 days today. You can, obviously. But I think if you want to keep your sanity, you probably want to take a little bit more time on your contracts if you're looking to trade the overall market today. I'm going to keep saying this because I think this is important, especially if you're long the SPY, to capture the full picture here of these four indexes plus VIX plus VVIX. I think if you have all of these going at the same time, you can capture the full image of what's happening here on the market, at least intraday. And what is really going to decide if we get, like I just alluded to, a face ripper rally, is seeing RSP go green and sustain that push to the upside, especially because of how strong it was on Friday. Insanely high volume. If RSP can find its footing here, that's going to show that the overall health of the market, right, for all equal weight, the whole market's looking positively. All of the stocks are moving up, because if they're all equal weight and RSP is green, that means the sentiment across all S&P 500 names is green on the day, on average. And then if we know that the Q's are already hot and the Q's are already up by 1.5%, that should just simply be rocket fuel for the SPY to go even harder because of how heavy those big tech names are on the SPY. And if the underbelly of the SPY, like I was just alluding to with RSP, is performing well, then all signs would point to up. And SPY should get a larger push than RSP comparatively, or even IWM. IWM just made a new high a day. You're looking pretty good here on the Qs. If you like shapes, you could call this some level of a bull flag. You're going to look at this level right here, 599.36 LOI to break for bull confirmation. Probably 600 as well. I mean, that's your obvious level if you're your psychological level is what I'm trying to say here. 600 and the high day 606 cents on the Qs. This trade that I opened at, like I said, the 666 calls, the devil's number calls, are probably going to be like more of a day trade kind of play. I opened up a trade on Friday in our community, and it was like I call it a day trade kind of play because I'm looking to catch the bigger move here on SPY. If there is a bigger move, I'd rather be more exposed to capture a larger move if I can versus a shorter term trade with a 0 day. Where, yes, if I pick correctly and I get in cheap enough that the 0 days can make me a lot of money, but I could also lose money very, very quickly if we get this kind of volatility where we get whiplashed around. So I'd rather balance that risk to reward where I'm still getting something a little bit risky, where I'm paying for time premium, I'm paying out the money, right? But I'm at least buying myself the time in terms of not getting 0 day thetaed with buying tomorrow or Wednesday's contracts. The other thing, if you guys are trading weekly contracts, treat Wednesday as your Friday. So really, you're on Wednesday today. Think of it that way, actually. If you're trading weekly contracts. Today is Wednesday, tomorrow's Thursday, and Wednesday, treat it as Friday, because Friday itself is actually a half day. So if you're looking at trading weekly contracts or swinging any weekly contracts, you want to keep that in the back of your head, because it's going to be very important to how you should be managing your risk going into this week. Nvidia is just not getting itself together. Again, this 178.80 area is very important today. If we're not above this and then push up higher, then I'm probably going to be very defensive on Nvidia here short term. Just what it is. Google's doing all of the heavy lifting for the mag names. Actually, Meta's doing a solid job. I stand corrected at 2%. Google's almost 6% on the day. Monster move on Google. Microsoft going lower. We're almost getting to my buy point here. Apple coming down off those highs. Like I said, this is your swing trade. If you like a swing trade into the end of the year, I like Apple quite a bit. Today or tomorrow, I'll probably sniff out an entry if it looks viable. Oh, Tesla got a nice move too. 5% on Tesla. Nice little pop here in between these two LOIs. Watch that 411.61 to break. If you get that, you might have another $7 on the table on Tesla today. Big move. Amazon making a big move too. See, this is when things start to look really good, and I don't like it, and here's why I don't like it. Things looked really good last Thursday, and I was like, oh man, now's the time to be a bull. Now's the time to go long. Now's the time to go risk on. It looked like that last Thursday. It was getting exciting. Things were looking great. And then I got kicked in the teeth. And then the market said, oh, no, you don't. But what makes today different is we don't have any Fed speakers. We don't have anyone scheduled to speak. No one's going to open their mouth. Maybe we actually had unscheduled President Xi from China, if he's a president, Xi in China making comments or at least talking to Trump in some degree. So that obviously could affect the market. I think the prudent thing to do, especially once on this SPY trade specifically that I'm long on the 666 calls, as we get a break and as we get a push to the upside, slapping a stop on and then moving your stop up as you go. If you're like me and you want to capture like the bigger fish, so to speak, you can obviously take a trim whenever you make money. But as you continue to the upside, sometimes it's better to carry a heavier position without trimming and just manage your risk as you go. And I know that sounds stupid, but hear me out. If I was, like, let's say I have 100 shares or 100 contracts of SPY, and I trim here for 5%, here for 10%, here for 15% or whatever, and now I only have 5 contracts left, and it ends up mooning, right? You know, anything can happen, of course. And I'm managing my risk so that way if it does come back down, because it could come back down, I'm taking care of myself. But if I'm looking at the charts, I'm saying, man, there really could be a bigger move here. I could make a lot more money here. And you're not lying to yourself. Like, it makes logical sense. In this case, we're looking at the VIX, we're looking at VVIX, we're looking at the other indexes, and RSP just went green on the day. That's one of my catalysts. We've made a trade plan. We're looking at 6 different charts here to generate a full trade plan in this scenario. I would rather hold a heavier long position up to, let's say we go up to 20%, 15, whatever, gain, put a stop on down at 15% for a full exit at 15%. And then as it goes to 30, move that stop to 20%. And as it goes from 30 to 50%, maybe move it up to 30%. That way, instead of me taking small potatoes and trimming on the way up, I'm at least getting stopped out, so I'm not going to lose any money. And I'm riding the move on the way up. Very similar to a trailing stop. I just like the control of being able to set my limit as I go versus a trailing stop just says like once you're under 5% or once you're under 10% or a certain dollar amount cut out. I rather look at the hard number and go, okay, this is where I want to stop, and then move it up to the next area I want to stop. And I think what a lot of people don't do and they should do, so this is something for your consideration. This is the chart on those 666 contracts. And you can see where volume is, obviously, just like you would trade any other stock. And you could see what areas of significance are on the chart, right? Where is the most volume? You have a POC on this chart, right? You can see if people are adding or dumping contracts, it's down here, right? Where roughly I entered. That POC is at 229, 228, so it's a few pennies more than I entered. Down here. You can see where the 200 MA is, where, you know, that will correspond to some level of resistance on the SPY as well. So you can use this to kind of set your limits and go, okay, well, you know, there's some consolidation here, or maybe I use the breakout candle, this candle here, and put a few cents under for my stop. So maybe in this case, I put a stop at 251. And that way, no matter what, I make money. And as we move up, I move that stop with me to the next area of significance. Let's call it right around here at like 278. So now I could put a stop on at 251. If this contract goes up to 337, maybe I move my stop to 278 and then just move it up as you go. I think there are scenarios where that is the prudent choice versus taking trims like I personally normally would, because I'm, again, looking for the bigger fish in the scenario where these contracts could realistically go in the money today. Because IV and volatility is so high, the market is pricing in that chance. That's why these contracts are so expensive, even though they were at the time like $3 or $4 out the money. They are carrying so much extrinsic value because there's a real shot of these going in the money. That's why paying for cheaper contracts isn't necessarily always better. Yeah, you might have a larger percentage gain, but the odds of you being correct are theoretically lower. For this specific contract, you're also looking at a delta at 44 cents. So each dollar move on the SPY, you're gaining 44 cents. So if I'm assuming zero delta appreciation, roughly from where I entered here, which was right around here, we'll call it the purple line, just to be generous. Each dollar I'm going up from here, again, assuming no delta appreciation, I'm making 44 bucks. So if I'm at a 239 contract for 44 bucks, and again, assuming no delta appreciation, which it will appreciate, then I'm assuming that every dollar move here, I'm making at least ballpark 5 to 7%. Quick math in my head. So if I'm looking to go to 666 with zero delta appreciation, the most conservative metric I can give you, then you're looking at a gain of, for a 12, $1.20 on a 139 entry, gives you about a 50% gain ballpark, right? Just rough math in my head. So those are the opportunities I want to look for. The next LOI, if we break high a day, is right here, and I call it the Super Devil number, 66666, the number of the beast. But so far, we're rocking and rolling right now. Nice momentum here on the SPY. Like I said, what I was looking for was RSP to go green. I'd prefer we get over open and the high a day. That'd make me feel really good. But this is a good sign because it's, again, telling me that the 500 names of the SPY, equal weighted, are all pushing as a average green. So this is a good idea to look at sentiment. And as you guys know, I prefer to look at IWM for sentiment because I think it's a more realistic gauge for sentiment. And seeing both of those in line together are very supportive of my narrative that I'm looking for, that we're going to see a bull push here. You're seeing the Qs test and break above 600, making a new high a day. I would feel more comfortable once we're over this very important level of 601.65 on the Qs. I feel a little bit better there. VIX has not made a new low a day, but if you remember what I told you earlier, VVIX has. So VVIX is coming down and VIX is still moving down. What does this mean? If VVIX measures the volatility of volatility and it's moving down and the VIX is also moving down, this is indicative of a volatility decay move in real time. So this is showing us the odds of volatility getting more volatile are coming down, because that's what VVIX tracks, and actual volatility, the VIX, is also coming down. So if we saw VVIX going up and VIX coming down, that would be indicative of a potential harsh reversal we could see on volatility. It would hint to us that volatility is still very combustible, right? It could flip around at any moment. But because we're seeing VVIX decay and VIX decay, that supports my narrative of seeing volatility as a whole come to the downside, which obviously supports more of a bull market thesis than a bear market thesis. Again, it's not one-to-one, but it is something you want to be mindful of. Those contracts right now are trading at around 308-ish. Not too shabby. I'll take a little trim here. Why not? Just so no one can say they didn't make any money or anything, I will take a trim. I don't want to hear anyone complain. It's 28%. And like I said, there's the bigger fish here, and that's what I'm looking for, ideally. And if you want to be super careful here, I'll lead by example. I'll put a stop loss at break even, because anything can happen, right? And let's ride this to the upside. So now how I want to play this. Like I said before, because right now you're a little hot. We might have to come back down. A double top rejection here would make a lot of sense to cool and back test the 664.55 area, then bounce and go. If bulls are really strong right now, then we pop this high at A and keep going, which would be fantastic. So if bulls are really strong, that's what we're going to see, which we might see. And we're seeing it in real time. There we go. Looking like the bulls are really strong. We're going to want to see the volume of this candle. We're making a new high a day right now, 665.68, and pushing to the upside. Those contracts are now up about $1 here, pretty solid. We're going to see how that plays out here momentarily. The Qs are near this key level, so you're going to want to keep an eye on that 601.65 here on the Qs. That's going to be your key level to break here for even more bullish tech. Now, this is the other reason why I like SPY today over any other sector, even picking tech, because tech was the laggard when we looked at all of those Friday moves. Tech was the laggard. So if tech can show up today and show up bullish and all the other indexes are bullish, that could spell a sharp bull reversal here in the overall markets. So if tech shows up and can hold its gains today overall and continue pushing to the upside, while IWM is up, while RSP is green, and while the SPY is obviously consequently pushing to the upside, and VIX is moving down, and VVIX is also going down, this is a very, very, very strong bull narrative short term. We have to be nimble, like I said before the market even opened, that things can change, obviously, right? So we have to remain nimble, that things could change even this week. But in a vacuum, today alone, this is looking very solid. And I want to pick my words carefully because last Thursday was looking fantastic. I literally turn off the stream, I go make lunch, I come back, and the market took a huge dump. So as it stands right now, we're looking okay. Looks pretty good. All right, so it looks like we made that break of that potential double top area and getting a little bit of a rejection here, nothing crazy, which makes sense. Like I said, what would make a more sense is to get some level of cool down here, back test this 664.55, bounce and go. The most bullish scenario is just to melt up, which it's fine. We didn't get that. Let's be realistic. You already moved about $3 in like 10 minutes. So that's a solid push here. Excuse me. So getting some level of a downside here makes sense. Let's see if we bounce around the 8 EMA. The most bullish scenario would be to consolidate above the 8 EMA, so this light blue line on my chart, and around the POC here and kind of just go sideways and then move to the upside. That'd be the most bullish scenario. Second most bullish scenario would be to backtest this LOI, fiddle around there, and go higher. Under that, then we have to reevaluate, see how everything's looking. But we put a stop loss on, so made money. Said make 27% or 28%. Stop loss is on. Now we wait, see what happens. And then we can do my whole moving the stop loss up thing. You're Adam, listening to you on a business trip. How's NVIDIA looking? I talked about NVIDIA quite a bit already, so let's touch on it again. Looking at the 178.80 area to hold intraday today. And ideally today, especially because it's a laggard right now, looking for it to push above that 183.30 spot. Semis have been a little weak, but if NVIDIA can show some strength here, especially with how we're looking at on the daily chart, leaving these nice 2 wicks, a higher wick today, depending how volume comes in today, depending how price action is today, I like NVIDIA quite a bit if you can get above that 183.30, because I think it can push even today, but it's a little hairy. It's not out of the woods yet. Google has been putting the market on its back, 6.2% right now in an insane beast. And I think what's happening with Google, and I don't think this is rocket science. Actually, I'll record this real quick. Intraday right now, Google is up 6%. It is at all-time highs, and some people are looking at Google right now and they're going, why is Google so expensive? I don't understand why Google keeps going up. People are trying to short it and they're getting absolutely demolished. People are longing it and still longing it, and why are people doing it? And here is why. So Google has been known as a search engine. They make a lot of money as a search engine. Obviously, they have other aspects. They have hardware. They've got YouTube. They've got a million other products, right? Google is a huge conglomerate. But now what people are really starting to price in is Gemini. And I think Google has been undervalued from the sense of the market not pricing in Gemini or Gemini's abilities. And if you actually use Gemini or use a bunch of AI software, it's pretty good. A lot of the stuff that I mess around with AI in is Gemini. It's better than ChatGPT in my opinion. It's better than Grok. It's better than basically all the other AIs I've used, tested personally. And Gemini is pretty solid. And I think the market has been sleeping on Gemini for Google. Now, what does this really mean for Google? Well, if we're looking at other companies like OpenAI, for example, and they're at a $1 trillion valuation already, and they're a private company, obviously, but they're evaluated so lofty. Is it insane to think that Google, theoretically by comparison, can add another $1 trillion to their market cap, which would roughly be, at least at this current day, another $100 in price? Is that insane? I would argue no. Mainly due to the fact that people have been ignoring Gemini. Now, is that move starting to get cooked in? Yeah, I would say that that's starting to get baked in quite a bit. But it also doesn't mean I'm looking to short Google by any means, because it's strong and it's been strong. It has been consistently strong and still going to the upside. You're playing with fire here if you're trying to short this, mainly due to the fact that it has a good business that makes a lot of money, and their other areas that they're looking into is going to make them a lot of money also. What I mean by that is, if you compare it to something like Meta, that's been performing not as great, they have something that's called Reality Labs, which makes them zero money, and they spend a lot of money on it, right? Now, can that make them money in the future? I do think so. I think Reality Labs is actually a sleeping catalyst as a bull catalyst for Meta. But comparative to Google, I think people are looking at the real value of Gemini, especially the 3.0 version, seeing what this can do, and seeing all the business possibilities for this, and how many people will integrate Gemini into their personal businesses, into other public companies, right? How pivotal that would be, and how important that would be for a lot of people, and how much money that can bring in Google in general through enterprise deals, through working with small businesses, through even selling ads eventually through their Gemini platform or whatever, right? The possibilities really are endless, theoretically. And because Google's executing so well on it, I think it's still undervalued. It's scary for me to say that. I'm a very conservative kind of guy when it comes to investing, especially when something's up at all-time highs. I'm not like, yeah, it's undervalued. I think it's a stupid thing to say, and I think people who say that are dumb. But I'm saying that a little bit because I think there is more value here. I think it's getting baked in a little bit now. But I think long term, Google's got a lot to go. I don't know if any of you guys saw the anti-gravity, I think it's called? Antimatter, anti-gravity. It's basically a coding platform that Google created on AI. It is also free, which is insane to me. You could go in there, and I'm not a developer. I don't know much about coding, but I've seen people who are developers and are coders that have been using it and singing its praises very highly. And you could basically hire a team of AI agents, theoretically, to have them work on individual tasks to make a new whatever app, website, whatever you want. And it is insane that A, it's free, and B, that it's that good. I've seen people produce awesome things, those that have experience and those that don't, using even that platform. VO is insane. I mean, I think actually, here's what I'm going to bet. I bet Google and Gemini spin off one day. I bet you Gemini will spin off from Google as its own company because it's going to be too big to manage under Google's own umbrella. It's going to have to spin off, I think, one day. And I think that is going to be an amazing company to buy, because if you think about it right now, Gemini's got obviously the LLM, so the large language model. You've got an image generator with Nano Banana, right? You got VO for video creation. You've got a lot of other Google Labs. I play with these all the time. You got Whisk and all these other Google Lab products that they're experimenting in. There's one that can help you write like poems and stuff. Like, they got all these other like little doodads that they're trying to perfect, obviously, as they go. And I think that's why Google could be really undervalued here to an extent. I want to be very careful saying that. It's up 6% today, and it's hype, right? But where people are thinking about shorting and thinking about playing against it, yeah, you can make some money on the short side, especially if you're an intraday trader or whatever. Obviously, I could short it right here at 318.56 and close it here, and I'd make $2. Like, of course. But longer term, like, people are thinking that they're like, this is way overvalued or anything like that. I strongly disagree. And I think Google with Gemini has a lot more room to go to the upside as they find means of making more money with Gemini. That's where I think is the real value with Google. And like I said, I'm going to put my stake in the ground right now that Google will spin off Gemini sometime in the future, probably pre-2027, because by then I'm assuming Gemini will be at least version 5, and it could basically stand on its own 2 feet, and they'll find a way to monetize it. But it wouldn't shock me to see a spin-off eventually with Google and Gemini. But all in all, I think Google is still theoretically undervalued. Long-term as an investment piece, it has been moving hard, but I don't think it's unjustified for the move and for the price that we're seeing right now on Google. Strange Maker saying he's late to the party, but let's go. Yer! Love to see it, my friend. Let's pop back to the SPY, see how our trade's going. Okay, a little bit what I said. So like I said, I wanted to see us stay above this. We kind of came down, wicked, and came right back up. So that's not a bad sign either. Typically, when you see a sharp move like that, it's called a liquidity sweep. So you're seeing people who want to be long try to scoop up shares as quickly as possible on weakness to ride to the long side, which is good in this case if you're already long like I am. So we're going to watch the high of day here. Again, this is my next price target up here, 666.66, an area of significance. I would also put my 666 calls in the money, which makes things a little bit easier to manage, makes it a little less stressful. So we'll see about that. Let's check out the Qs right now. Kind of fluffing around. This is going to be a big trigger point for you today on the Qs at 601.65. IWM's been pushing. It's looking solid. It's looking like small caps are going to move. And RSP is near the open. Again, this is the big one that I want you guys to notice, that we're seeing a clear and clean divergence with RSP starting to look even more bullish than the market. Not that the market's bad today. It's looking pretty good, mainly due to the fact that the Qs are up. So this is showing the overall market is feeling good on the day, right? The breadth is performing well. Really, NVIDIA has been holding down the market today, honestly. If we're looking at things like in a vacuum here, Google's been kingpin. It's pushing. It's holding the market on its back right now. NVIDIA's slowing it down a bit. Microsoft's slowing it down a bit, but a little bit better. Meta's actually been doing it good. Meta's having a good day. Apple had a good start and kind of coming down. Now it's looking like it might get some footing here. And Tesla's been a rocket today. Tesla's been rocking and rolling today. It's looking pretty good. So we'll keep an eye on the market here for now. I really want the bigger fish here. And the bigger fish, now we're going to enter, let's talk about this real quick. Let's turn off my lines. We're entering a tricky spot on the market. Not tricky bad, tricky good. We're entering a tricky spot. That's why we'll go back to volatility here in a second. Between now and basically the next $8 or so is not going to be easy for the SPY. But especially if that is a quick move, it's going to be extremely bullish. So if there's one thing to take away from today's show, if we move, especially if we move up to like the high of this candle here, or not the high, the close, sorry, the open, I'm really off my game today. If we go to the open here, which is 672.91, and again, about $7-8 or so, depending on the current price, how quickly we get there will be indicative of how strong the bulls are being here short term, especially if it's in a daily candle like today. If we close around here today, it's not that it's a bad candle, but it's more of this, what we saw over here, where we're going to kind of sit in this red candle for quite some time, in the price action of this red candle, I guess I should say. As a bull, you want to get out of this as quickly as possible. We want sharp V bottom and going, hey, we're going to the moon. That's what we want as a bull. As a bear, you want to reject here. Like, you don't want to get any higher than like 667. You definitely don't want to get any higher than this POC here. So the POC on the daily chart right now is 669.63. You also have your 50 MA there. That's a huge line in the sand. So if you want to make it mega simple, 670. As a bear, you don't want to be over that. If we break over 670 today, especially if volatility is under, we're almost at my 2142. If we're under 2030 on the VIX and SPY is over 670. Oh, I don't want to say things sometimes. We're looking really good into the end of the year. We also have to keep in mind, we have a very short week in front of us that can cause a little extra volatility. Today and tomorrow tends to be normal, right? Wednesday and Friday tend to be very retail heavy. Not that that's a bad thing, but it means that the market can behave very excitable either way. So I like the word combustible, actually. I used that earlier. The market can be more combustible either way when things are more retail focused, which is what we're heading into on Wednesday and Friday. So I'd prefer that if we had a bull move, it happens today, because if we have a bull move today and then a bull move tomorrow, we're going to have a stupid hated rally, because Wednesday's probably going to go and Friday's probably going to go to the upside. You're going to have 4 green candles in a row, because retail's not going to let it fall. Retail's going to more than likely long the hell out of everything. if we get a bull day today and a bull day tomorrow into the holiday. I'd be surprised if that wasn't the case. But all starts with today. So far today, as you can see here, we kind of got like a inverse head and shouldery kind of look here. Shoulder, shoulder, head, kind of like a humpback of Notre Dame, second head. Or actually, you kind of have another inverse head and shoulder. Shoulder, shoulder, head. So you could have another inverse head and shoulder within the bigger head and shoulder here forming on SPY. So it's looking still pretty good. Again, I wouldn't get too excitable until we're over this number here on the Qs. And actually, we are about 10 cents away from my LOI on VIX here, which is really going to be a trigger for more upside based on where we're sitting on the chart right now. So you're going to want to see that 2142 crack, because that goes, you got about almost $1 of decay here, or more than $1, I should say, of decay to the downside here to that 2030 spot. I'd love to see more strength come in on NVIDIA today. As we saw on, I think it was Friday, right? Let me look back in time a little bit. Yes, it was Friday when we got that chip news that Trump is thinking about selling chips to, or allowing NVIDIA to sell chips to China or whatever. We had a pop from 178.62. Basically, it was a $6 move on NVIDIA very quick, right? We're kind of consolidating down here. News could come, obviously, but I think that we would still see, if we're going to see a bull move today on NVIDIA, or sorry, if we're going to see a bull move in general, for NVIDIA, it has to happen today. And it has to be a sizable one. If it's not, then it's more questionable here short term. Especially with how the whole market's like green right now. In terms of like looking at our RSP. I shouldn't say the whole market. The feel of the market's very green and the VIX is red. All your other mag names are green. So NVIDIA is really holding back the market. And if NVIDIA doesn't find its footing and get a hard and strong push, I would be very cautious around it in the near term. But I think it's just acting as a laggard right now. And if this gets a hard push, it's going to launch the SPY, A. But B, you're going to see more than likely some squeezing going on in NVIDIA. And I know that sounds insane. But from this main fall, right, from the all-time highs, there are probably bears still in it, realistically. And I'll tell you one thing, there's definitely bears in it from this move, from the 20th. So it has to happen today, though. If we don't see bulls come into NVIDIA and come in strong, and I'm talking at least a 5-point push here. I know it sounds crazy, but I think that is an opportunity today, and I think that I see that as a likely circumstance that happens today. Because if it doesn't happen today, it doesn't happen at all. At least this week, in my opinion. And because, again, because of the environment, because of all the other names are outperforming right now, mostly everything's sitting pretty green, right? RSP's green, SPY's green, Q's green, IWM's green. We have all the indexes pointing in the same direction. You have a golden, what I call my golden setup, which is SPY's going up, Q's are going up, IWM is going up, VIX is going down, VVIX is going down. And in this case, you want to rope in RSP, RSP is going up. So you kind of have a golden long setup to the upside here that is being held back by NVIDIA. So if NVIDIA doesn't find footing to push today, it's dead, short term. Like it won't look good. And I'm talking from more of a trading perspective. From an investor perspective, I wouldn't be scared on NVIDIA until you're under basically 170, 158 on long equity. You could give it a little bit more rope, obviously, from what I'm looking at today. But bulls really should step in today on NVIDIA. If they don't, it's a concerning sign. But we will see. We will see. Getting a little bit of a retracement here, which makes sense. Looking like we're going to have 50 MA tap on the Qs, lining up with that LOI there. SPY, about the same thing. Back to this LOI right here. VIX, off by a penny. VIX tapped my LOI, off by a penny. 2143 was a low day on the VIX. 2141 was my LOI. And looking like we're getting a little pop there. So we'll see if the VIX moves to the upside. We will see. I'm going to keep an eye on Apple today. I know I talked about it already, but I probably won't open it live. I'll probably open it in the Discord, but it really depends on how much things cost. What are their options looking like? Let's go out to January OPEX. 280s maybe? $7. Maybe a spread even. I'm gonna have to sit on that. I like this consolidation at the highs. There's obvious risks there with getting one rejection. Kind of call that a second rejection. If you really want to, you call that a third rejection. You call that a fourth rejection at the highs. But as you tap those resistances, they tend to weaken, right? So it tends to push for an upside move here. You're still maintaining above your EMAs and MAs. It looks pretty solid. You broke the red daily SAR here. Your MACD's starting to curl up. Good volume on Friday's candle, engulfing that bad Thursday, right? I like it quite a bit, and I think if people are going to be long tech, they're going to run to Apple for safety. We might even be seeing some inflows into Apple from NVIDIA. Kind of makes sense. That would make some sense. People want to squirrel away money in the cash-rich Apple. It makes sense. Looking like we're going to get a similar kind of price action here on SPY. So we had those two little wicks there. Looking like we're going to get those two little wicks here on this higher LOI. So we had those wicks down here. So we're wicking higher, which is good. We're making higher lows as we're moving up here. Let's check on our IV. At the money, IV has come down about 4%. It's still extremely high. We're still at 26%. 0 DTE IV, which is still extremely, extremely high. So the market is still pricing in a higher volatile move to the upside, or either way, I should say, actually, more than it's on its face seems to be. There's a stronger move cooking here that has not precipitated. Yes, I guess is what I'm trying to say. Alrighty. I think we're gonna wrap it up here, but I won't leave you guys without a game plan. I'll give it another minute or two here to see if we can pop this 601.65 on the Qs first. And then we'll be wrapping things up more than likely. If you have any questions, feel free to drop them if you got them. We'll kind of go from there. And if you haven't already, do me a quick favor, wherever you are. Like the stream, like the chat, whatever you're watching on. I appreciate your support. Thank you in advance. IWM moving towards the high of the day here. So we're not looking bad by any metric. Looking pretty good. Looking pretty good. Pushing. IWM's at the highs. Literally at high a day right now to the penny. There's your break. IWM new high a day. Yeah, this is a very good sign. SPY made a new high day. This is a very good sign when all three indexes move the same way and VIX is moving down. VIX has broken 2142. So that's that key LOI there that now pushes us, that puts 2030 on the board. This is the big one you want to keep an eye on. And kind of like how I predicted here, kind of theorizing that we'd see 2030 interact. I thought it was going to interact when we tap 66666, but it's looking like we should get to that spot on the SPY prior to that spot on the VIX, which means theoretically, if we're looking at volatility as a means of, again, judging the spread between SPX contracts, we're probably going to overshoot this, the 666.66, and we're probably going to get caught right around here, this double LOI up here. That point in time, I think we're going to see the VIX around 2030 if we continue to decay. VVIX is continuing to die on a vine, which is great. Under 110 is even better. Under 100, the market tends to be very calm with VVIX specifically. We're at 110, so there's still a ways to go. For comparison's sake, 100's here. It's like all the way down here. 110 is around here. So we're not far away. I mean, we're at 110. But not too far away, about 40 cents lower there. 105 is right around here-ish. So I'd watch basically whole $5 intervals here on VVIX, 105 and 100 into the rest of the day to see how we get interactions at those price points. All right, not looking like we're going to get it yet. All right, so here's what to watch for the rest of the day. Like I said, keep a tight eye on RSP. Again, your equal weight S&P 500, which now that it's very relevant, I guess we'll keep it up here on the program and we'll talk about it quite a bit. But we'll keep an eye on this as we're seeing, again, a little bit of divergence in general between the overall market. Today is a little bit different because tech is so strong. But I like to use, as you guys know, I use IWM as my gauge for market sentiment. In this scenario, because of how the market's been leaning, I want to also incorporate RSP into that market sentiment kind of analysis, mainly because of how weak NVIDIA has been, but how like fishy, I guess I should say, the Mag 7 have been. Again, very hit and miss right now. Google's hot, Microsoft's down. Meta is recovering, but still down overall on the daily. Apple's hot. Tesla was down, now kind of recovering. And Amazon's down in the dumps for the most part, having a green day today so far. But you've got a very up, down, up, down, up, down trend with your Mag 7 names. So we want to hedge our bets here, theoretically, and get an idea of how the underbelly of the market, as I call it, is performing and feeling. And this helps you get an idea of which way the wind's blowing, how all the other names in the S&P are performing. So if everything was equal weight on the SPY, how would the day be performing? This kind of gives you a better idea, not to get too overwhelmed with just looking at, obviously, the Mag 7 names. For the Qs, you're going to want to watch 60165. That's going to be a pretty decent trigger here on the Qs, which really should come very soon. You're getting high volume here, so if it's going to break, it's going to happen probably as I'm wrapping up the show. Past that, you could melt $7 to the upside. I don't think that happens without NVIDIA participating, though. For NVIDIA, again, 178.80 is a very key spot here on the weekly chart. And then another key spot on the weekly chart is 183.30. So I need to see, and NVIDIA's just kind of been chopping sideways today, not really going much of anywhere. Lower highs, higher lows for the most part. Need to see volume come through on this, kick it into high gear. If this kicks into high gear, the whole market's going to melt up. Everyone's going to go, what happened? And it's going to be NVIDIA. Because all your other Mag 7 names are doing pretty okay on the day. Google's doing fantastic. Microsoft has recovered. It's not great, but it's doing better. Meta is having a great day now. It was really in the dumps earlier, but it's having a pretty good day. Apple had a good start in coming back down. Doesn't mean it can't revert back to that, but still green on the day, all things considered. Tesla's been killing it today. Great job on Tesla. And Amazon's been going pretty good too. So really, if the market was to find a lot of strength out of nowhere, it's going to be through NVIDIA. As it pertains to IWM, I mean, we have almost erased that Thursday fall, believe it or not. So this really puts things into perspective of, and I think on RSP, did we erase it yet? We're almost there on RSP too. So this really puts things into perspective of how strong those Mag 7 names are, right? How much they affect the market comparatively, because the SPY is not there yet. We're, like I said, we're like $7 short, something like that, a little bit more than that. And IWM is already there, right? This is showing in my opinion, showing a very clear rotation into the end of the year, where we tend to see a little bit more risk-on behavior, which is a little absurd considering volatility. So I'd be more interested on small and mid-cap names in general if we see volatility come down a little bit more, because I think you'd see more risk-on behavior, especially after we get over the 50 MA on IWM. But today for IWM, really the big number to watch is getting above the high of that Thursday candle, 239.10. You are not even $1 away on that. And then you're over that Thursday, horrible Thursday we had last week. Recovered in 2 days would be very, very, very cool. On top of that, you've got that red SAR on the daily, right now sitting at 239.58. Not far off either. Literally $1 from here breaks you above that Thursday high and puts that red SAR in shooting range. So you could see a sharp reversal here on small cap names in general. It's really nice to see. Lastly, we'll wrap it up with IWM. We'll wrap it up with the VIX. This 2142 spot is a spot to keep on watch for the whole day. See a little sticky here. Breaking beneath that puts 2030 on the map. 2030 is a huge spot on the VIX. If we break 2030, you're more than likely going to melt $1 or $2 down to the downside on the VIX. Hopefully that's enough to help the market really get a hard push. I don't think you break 2030 without the help of NVIDIA from a sentiment point of view. Because I think part of the reason why the VIX is, I mean, it's down 8% still, but part of the reason why the VIX is still somewhat elevated is because NVIDIA hasn't participated in the rally that everyone else is participating in at the moment. So it's acting as a laggard. If the laggard shows up and starts performing with everyone else, we're going to have a face ripper. Like, we're going to have a big day today if NVIDIA can show up to the party. And today it has to. Again, to be blunt with you guys, it really has to. It has to get over this 178.80, and it really has to move up like $5. Otherwise, on the daily chart, again, as an investor, I could give it another like $7. But as a trader, not that I'd short it necessarily, I just wouldn't want exposure either which way unless it can really, like today, it has to show up, and it has to show up big with good volume and a hard push. It probably needs a catalyst. Maybe Trump will say something about NVIDIA chips again. We'll see. But this and volatility is what I keep an eye on. The 666 calls are now in the money, actually. There we go. So my next LOI here is 666.66. You're up over $1 on those contracts now. How about I'll do this? I'll take one more trim before I go. That way everyone's happy. Right off into the sunset. There's a 42% gain for you guys. All right, cool. Okay, now the rest I'm going to wait. No one bug me. The rest I'm going to see if I can catch the bigger fish here. Again, the bigger fish is this big move I'm looking for if NVIDIA participates, because everything else on this setup is, like I say, a golden setup where the Qs are pushing, IWM's pushing, RSP is pushing, VIX is decaying, VIX has room to go lower also, VVIX is moving down. That is a golden setup. The only thing missing from this golden setup is the 10% of the freaking market not participating in it, which is just NVIDIA, because it's like 10% of the SPY or whatever ridiculous amount, right? So if this just shows up to the party, right, we can have a lot of fun. Not that it's a bad day by any means, but this can get so much more stupid is what I'm trying to say. And I think you could envelop and engulf that Thursday candle today. It's a realistic possibility if NVIDIA bulls can show up to the party. That is to be seen, though. But with that being said, guys, I hope you enjoyed the show. I hope you had a good time here with me today. I'll be doing a live stream again tomorrow at 9:15. Same bat time, same bat channel. And I was thinking about doing one on Wednesday or Friday, but honestly, it's probably going to be pretty dry, so probably won't. Or maybe I'll do something for the Discord, like a Power Hour stream. So if you're in our Discord, you want to check that out, we'll do something fun there. But outside of that, we'll keep it pretty calm this week. We're going to have a good week. It's going to be a good one, and we're going to have a great Thanksgiving as well. So some will say you need an angle to trade. God, I forget my own outro. Some say you need an angle to trade. Well, I like to look at things from a different... Nope. Some say you need an edge to trade. Well, I like to look at things from a different angle. That's what you always get right here on the Atomcash angle. Hope you guys have a great rest of your day. And remember, precision beats prediction every damn time. I flubbed my outro, but I will see you tomorrow.
The time has passed, and that's a wrap. You're on with the angle and your plan of attack, while the show